Hello and welcome to Trade Finance Talks. I'm Mahika Ravishankar, Deputy Editor at Trade Finance Global, and we're coming to you today from the 2025 Sibos conference in Frankfurt, Germany. I'm joined by Carl Slabicki of BNY, and we're going to talk about fraud in payments, a theme which has come up a lot in discussions we've been having and in the sessions that we've observed. Carl, welcome to Trade Finance Talk.
Thank you for having me.
So we'll kick off with a few quick introductions. Just tell me a bit about your background and your role within BNY.
Sure. So I'm the executive platform owner for Treasury Services at BNY. So we provide payments, cash management, trade finance to our clients all over the globe. We have about 2,500 banks that we support in virtually every market across the globe. We do about $2.5 trillion in payments every single day, about $4.5 trillion on a peak day. But we process payments in over 120 currencies. Trade finance with over 4,000 endpoints. So really bring the power of our network and our stance as a global firm to the markets. But we have an extensive breadth of platforms that we offer across BNY, from custody to brokerage services, wealth platforms, et cetera. We have about $55 trillion in custody, close to $3 trillion in assets under management. And as I mentioned, one of the leading providers of payments across the globe. So really trying to bring the power of all of our platforms together to bring value to our clients.
Great, and I want to kick things off with a paradox that I've been observing, which is that while fraud detection and protection has grown increasingly sophisticated, the rates of attempted payment fraud have increased year on year. Why is that?
Yeah, it's a great question. We observe a rising rate of fraud attempts as well across the industry. It's not unique to any individual market, but it is different when you look payment type by payment type. So as you notice, the trend is always how do we go faster payments, final, irrevocable, 24/7, instant, et cetera. And the industry is making a tremendous amount of progress on all those fronts within the regions and on an international scale. But we do see rising, and it ranges, right, from business email compromise for global trade payments, where people are kind of, photoshopping and hacking supplier invoices, to consumer scams that are happening, right, tricking people into sending authorized payments and so on, as well as in some of the legacy rails where in the US, a Federal Reserve payment study came out on fraud, and it said debit card and checks are the highest attempted fraud payment vehicles that are being kind of perpetrated within the market. So
checks is interesting. I didn't expect that to come up.
Yeah, I mean, in the U.S., we still do over 10 billion checks a year as of the last triannual Fed payment study that exists. And still, right, it's easy to copy a check, Photoshop it, try to present it, et cetera, even though it's been around for decades and there's controls in place. That's why we think the shift from paper to digital is so critical, because there's more data available to build in real time for protections and processing with digital payments as opposed to the paper processing.
I want to touch on a point you mentioned about the need to make payments and payments processing more instant. How can banks balance this and balance the need to maintain a competitive advantage with customer protection, especially when you consider initiatives like data sharing?
So data sharing to us is a critical element of helping protect the ecosystem for banks, for businesses, for consumers. Without data sharing and fraud information sharing, everyone's fighting this fight with one eye closed. If you only have your own data to look at and run anomaly detection against suspicious activity against that, you're going to be pretty limited. That's why things like the Swift pre-validation effort that's going on across the market is valuable, because you can extract federated data from different endpoints. We're working in the U.S. market with the Clearinghouse, the Federal Reserve, with NACHA on ways to centralize data information sharing at the network level, so you can benefit from all of the data that sits there within these pools. And that, to us, is really the key to bringing that in. But I think one of the better things that we've been doing now, not kind of beyond planning for the future, is we're starting to use AI to help do anomaly detection for our clients, to really pick up things that are anomalous, suspicious patterns, flag them and give that to our clients in real time, so we can actually help them using machine learning off of the data that we have or that we can pull from the market to give it back to them to help protect those payments.
And where else have you been using artificial intelligence in fraud prevention?
This has been a really fun story for BNY. So about 2 years ago, we launched our own internal proprietary platform called Eliza. So Eliza is the wife of our founder, Alexander Hamilton, 241 years ago. And we built this AI platform, which is essentially can plug in any type of language learning model from the market, ChatGPT, OpenAI, et cetera. And we can plug in and plug out different LLMs. And what we built centrally was a platform that everyone in the firm can use, whether it's engineers, product, service, relationship management. And we have hundreds of initiatives that are live being used across the platform, such as manual payment repairs. So we actually have digital employees. Someone as an avatar, as a name, as an email, it has a manager. You can send it an email, it will reply to you. And they're doing the manual repetitive things for payment processing that we used to have to do within a manual operator. So back office efficiency, we're using it for engineering acceleration. So to write better user stories, to actually draft code for our engineers and deploy that to production faster. And then even from our client-facing standpoint, we put an AI-powered bot into our API marketplace. So as clients go there to access our APIs, they can actually chat with an AI-powered agent to ask questions about the code and the test cases and integrate with us faster.
What relation does that have to do with Alexander Hamilton?
That's a good question. So, for us, he was an innovator, right? He built the bedrock of the U.S. financial ecosystem, right? With the U.S. Treasury, BNY, which was the first bank within the U.S. market. We were the first stock traded on the New York Stock Exchange. So to us, AI is really a critical component of how any business, including financial services, is really going to shift into the future. And you don't stay around for 241 years unless you're on the forefront of innovating and continuing to change and disrupt the market.
Thanks. And to just close things off, I want to talk about digital assets, another really hot topic at Sibos. Do you think cryptocurrencies and stable coins and such are going to make payments more or less safe?
It's a really good question. I think they have the potential to do both, to be honest, right? If you break it down at the end of the day, it's a technology. Like any technology, if you extract the good things out of it, you can move things potentially faster, potentially less expensive. You can make things more interoperable with other types of financial assets. So one of the value that I potentially see in the market of putting things on chain, whether they be private or public, is that you can exchange different asset types. So you can kind of take cash and payments and potentially make it interoperable with treasuries or money market funds and other type of investments. But it can also be used to add elements of risk into the ecosystem as well. So managing that, I think, is something that we're eager to do. We're supporting a lot of clients that are both issuing stablecoins and digital assets today, where we're providing the custody and some of the traditional fiat services. And we're evaluating where the technology can be extracted to help maybe some of the networks like SWIFT and the digital ledger announcement that they just did that we're participating in, how we can use it to tokenize deposits and move them more freely, either within our walls or within kind of closed networks. But again, I think the technology has a lot of promise, and we're trying to evaluate how outside of the digital assets realm can that be extracted and add value to more of the traditional financial services.
Thanks, Carl. It's been really great talking to you, and I've learned a lot, definitely a lot that I'm going to carry forward throughout the conference. So thank you very much for joining me.
Thank you. Appreciate it.